Okay, good afternoon, everybody. Very, very happy for you to be here with us. And I'm very happy to share the stage today with FinTech leaders in ASEAN. They have used, or the companies have used technology to essentially narrow the gap to access new markets, new products, new services in a way that's been consumer-centric, efficient, and also from a cost perspective, efficient as well. So before we get started, could I just ask my colleagues here just to explain a little bit about their company, and then we can dive right in, maybe starting with Kelvin.
Sure. I'm Kelvin. I'm the co-founder of Funding Society's Modalku. We are basically our SME digital financing platform. We give loans to small, medium enterprises that are crowdfunded by individuals and or institutions. So currently we are licensed and operating in 3 countries, Singapore, Indonesia, as well as Malaysia. And we are backed by Sequoia Capital as well as SoftBank Ventures.
Thanks, Kelvin. Ron?
My name is Ron Hose. I'm the founder at Coins.ph. We're a mobile wallet providing financial services to 5 million customers in the Philippines.
YT?
Thank you. My name is YT. I'm the CEO and co-founder of Jirnexu. We operate online financial comparison sites in Malaysia and Indonesia. In Malaysia, we have ringgitplus.com, and Indonesia, we have creditgogo.com.
And Kun Tanyapong.
So ASEAN Money is payment provider in 6 countries, and we operate in 2 models. One is e-wallet in some of this country, and also the rest country we are providing agent banking. We're providing payment services to unbanked consumers in 5 countries that we're operating in.
Thanks very much. So I think the first thing I really want to ask our audience, our panel members, is when you went into each of the countries that you're in, the first country that you were in, what opportunities did you actually identify in the market? What gaps did you see, right? And therefore, what strategy did you employ to narrow that gap? And maybe if I can start with Kelvin.
Sure. So I think when we first started funding societies in Singapore, we kind of take the approach of what many people take, right? That, hey, this is what has worked in the US, in Europe, in China, let's copy and paste and try to work it out here. And very soon we found that that's like the best way to get it wrong, in that a lot of local nuances in a lot of this business model, especially in financial services, rely a lot on local nuances. And what we gradually found out was that using a hypothesis testing approach turns out to be a much better way. So one example is that in Indonesia, for the first year, we targeted loans to e-commerce merchants because that's what peer-to-peer lending has grown, how peer-to-peer lending has grown in, say, in other foreign markets. But very soon we realized that, hey, the e-commerce market in Southeast Asia is still too nascent to actually support any meaningful growth for a peer-to-peer lending platform. Hence, we pivoted quite quickly. So I think in short, really taking a more hypothesis testing lens towards each of these opportunities, regardless of whether it has been proven overseas or not, turns out to be the most effective way towards serving this, the underserved.
So looking at specific opportunities and gaps and making sure that your product is specific for that particular market. Okay, maybe YT, if I can ask the same question to you.
Sure, thanks, Stephanie. Actually, I'd like to echo exactly what Kelvin said in terms of copying developed market business models. When I started, it was very much, the goal was very much to copy Money Supermarket from the UK, which is essentially how do we create an e-commerce platform for banking and insurance products in Malaysia. In terms of how to identify the opportunity, thinking back, it's very, you can see Money Supermarket was an extremely successful company. It's been around for 15 plus years. And when I was living in London, I loved using their service. So selfishly, I wanted to bring it back to Malaysia. But exactly like Kelvin said, when you try and copy these business models, the first time you do it, you don't really appreciate all the kind of local issues. But what's more interesting is, as we've gone through and as we've developed the business, opportunities have come about because of the challenges we've come across in the market, right? So we always find more problems to solve, and in the end, those open up more opportunities for us.
Thank you. Thanks. Ron, did you have a very similar experience? So were you copying something from that we saw in more established markets and bringing it into the Philippines? Or was it different for you?
I guess my experience has been a little bit different in that I actually looked at the market as a whole, and the reason I moved to Philippines in the first place was out of interest to build a company that had a positive social impact. And so I spent almost a year in the Philippines researching different areas, and I ended up in FinTech, not because I had a specific interest in FinTech, but actually because I saw the lack of banking penetration is something that impacts almost every individual's life, and actually not even just day-to-day impact on people's lives, but actually corporations, companies, like the whole spectrum of the economy is suffering from these gaps.
So looking at the market first, and then seeing what gap there was, and then implementing your solution to bridge that gap.
Yeah, like if you look at Philippines as a market, right, and kind of the key insight that we had was that actually more Filipinos have Facebook accounts than bank accounts. And then when you start to kind of think about the ramifications of not having credit history, so not being able to actually build up a business or have kind of upwards mobility, or having to be taxed 6 or 7%, almost a month's salary out of the year for sending money back home to your family, etc. There's a lot of friction in the system. And for businesses, 2 to 3 days of capital turnaround because it's hard to send money from one bank to another, or you're dependent on cash collection, etc.
And Kun Tanyapong, what was your experience?
Yeah, if you look at True Money Wallet when we start off in Thailand, roughly about 3 years ago, there's an unmet needs, in the market where mostly people who are digital users, people who are, want to buy things online, mostly digital content like games. But the pain point they have is, these people don't have credit card in order to buy online. So we come in and we provide a solution where you can actually top up your wallet and make that wallet to make a payment. And we start off with the MasterCard, partnership with MasterCard, prepaid MasterCard, virtual MasterCard that customer can pay online. Right? So that's the start of the business. So we actually address the pain point, the problem that consumer has in the market. And then we branch out, providing more services later into other use case, other payment case, and a different segment of customers.
So certainly looking at pain points, the gaps, and then implementing that. I guess it's no one size fits all, and the reality is that I think we need to understand what the gaps are in the market, and whether it is a new product or new service that you're providing, or whether it's something that's borrowed but has to be amended a lot, right, for that local market. That seems to be the experience that's been shared. Now, can I just turn a little bit to consumer behavior? So, all of you, I think, were very much so the first to market in your own product line and your own service line. So while you have been operating, has consumer behavior changed? And if it has, then how do you actually keep up, with the consumer behavior? How do you keep up with new changes and what consumers actually expect in the market? And maybe I can ask YT to start off.
Yeah, I mean, the market has just moved so much, right, in the last 6 years. When we first started, Rocket Internet had just kind of done their first round rollout. But when you look at what companies like Grab have done across the region, right, they've created so much trust in digital transactions, especially from the mobile. So that's obviously been a massive boost to us, because anything which increases trust in online transactions or using online services is an absolute must before consumers are willing to, say, apply for banking loans or buy insurance online. But at the same time, one thing we're very conscious about is, although we are essentially an e-commerce platform for banking and insurance products, the reality is that the vast majority of consumers across Southeast Asia still prefer human interaction, right? They want a phone call, they want to see someone face to face to explain it, even if it's a simple product. And that's something which as a business, we have to balance it too, right? How do we take advantage of technology to provide more value, provide better service, but at the same time, how do we meet essentially the needs of the consumer, right? Which is, how do we meet their trust needs?
Okay. And Kelvin, your experience in Indonesia and Singapore?
Sure, I think our experience actually differs between the business side as well as the individual side, right? So the business side, taking up loans and whatnot, what we found is that the adoption towards digital approaches actually takes a lot longer time. So we have been around for about three plus years or so, and even then we still face some SMEs who really just want to sign on a hard copy document, even though we already have you can just digitally sign within seconds, right? Or they would prefer they will go to the website and ask, ask to key in a two-factor authentication. What do I do next? And you have to guide them step by step. So we find the SME side to actually be be adopting the digital approach a lot slower as compared to the consumer side. And so far, in terms of consumer, they have been actually really interesting and great in the sense that they have adopted a lot of the digital methodologies a lot faster. To the extent that recently, when we launched our new investor app version 2.0, we could even gather a group of investors to actually do a beta trial, which is perhaps almost impossible when we first started off. So from a digitization of fintech inclusion perspective, it does seem like the consumer side will be taking off a lot faster as compared to SMEs in terms of the evolution.
And that's because consumers, I guess, are more nimble. SMEs still have the paper trail that they need to actually follow, and that's what you're experiencing.
Yeah.
Right. How about Kun Tanyapong? What's your experience in Thailand and across Asia?
Yeah, I think consumer behavior, and then we focus on the payment side. There are certain segments that we really help solve the pain point of customer and consumer. For that group of people, generally the changing of behavior, creating adoption is easier. Right? But one is come to different segments where the pain point is not as obvious. But we want to push our products to those segments. The adoption will be a lot slower. It will take more time. It will probably require a lot more effort, both on the marketing side, the push side, and technology side, in order to resolve the frictions that customer has in making payments. So it's really depending on the segments and the pain point that we are addressing. But what we are seeing is, and early users that we really target, especially in Thailand, where we focus on digital users, people who are gamers. I mean, that adoption is a lot quicker. But once we try to address people who are mostly shopping offline, mostly make a payment offline, convince them that, hey, don't use cash, use e-wallet instead. I think the friction is still there. Creating adoption of those group of customers takes longer, need more effort.
So it's a bit of an education as well, right, for this group of customers who may not be used to transacting online.
Yeah, it's couple reasons. Definitely education. You see, in most countries that we are operating in, like for example, country like Cambodia, for example, people haven't heard the word e-wallet. They probably heard the word for e-wallet for the first time that we educate to them. So it takes time to educate those customers. Once education started, we also need to overcome the issue like trust, because we are dealing with people money. Right? People use the wallet in order to make payment. People use the wallet to send the money to their peers or to their friends. So they need to trust our system. They need to trust our platform. So trust is also coming in as an important aspect in creating adoption.
That's a good point, actually, to ensure that your consumers actually trust what's happening and trust the new technologies and the new sort of methods of service delivery that they're experiencing. Ron, do you have any comments?
Yeah, we're seeing some behavioral changes just by nature of transactions going digital. People can send smaller amounts directly to their relatives. They can hold and pay bills instead of cashing out their salary. But I think the more interesting thing is actually the change in consumer psychology, right? So whereas 3-4 years ago, most of the questions we would get would be, is this legitimate, right? Now the questions we get from customers revolve around, oh, do you have this feature? Can I pay here? How fast will I get my money? So it's moved from trust actually to performance. And I think that's actually a very promising indicator for the industry as a whole. The second thing is actually the evolution of customer expectation, which is very interesting because there's a huge divergence between what customers expect from a bank or a traditional financial institution and what they're expecting from a digital platform, right? Even though the digital platform are at the end of the day still reliant on the that same infrastructure, right? All of a sudden, when you have a digital wallet in hand, you expect for it to work instantly because Instagram works immediately, Facebook works immediately. So when I send money or when I purchase something or when I pay a bill, the same level of performance is expected from digital. So those two things I think are actually going to drive everything forward because it's really the customers who are going to be pushing the industry.
And so customer experience is key in this, in terms of timing and methodology and how you plan to roll out new products and services, I guess.
For sure. Yeah.
Okay, let's just move on a little bit. Let's just change tact and talk about expansion, opportunities for expansion. So, using technology, certainly there is a possibility to, expand quickly and expand on a cross-border basis and across ASEAN. But do you actually see technology helping, or are there still hurdles? And maybe Kun Tanyapong, if I can ask what your experience is for ASEAN, given your expansion in ASEAN.
Yeah, definitely technology is important. I think the core technology, I think that's something that can be applied across all countries in Southeast Asia. For example, if you want to do the payment platform, we have the payment platform that can scale to different countries. But when you actually, want to expand it in certain countries, and we talk about local context earlier, it's become a completely different story, because one, regulation. There are very different regulation in different countries. In some country, getting e-money license, e-wallet license take 3 months. In some country, it could take 2 years. So license important, regulations becoming very important, right? So even with the technology platform, that people like ASEAN Money has, getting into different countries will need slight different adoption, right? One is regulation. Another regulation that we also looking at, because part of being payment, one of the most important thing is the KYC, know your customer, right? And this know your customer is actually vary country by countries, really depending on the infrastructure of each country. Certain countries already have a very good system for digital identity. For identity, right? Every population of the country has an ID, right? And ID has a chip card in it. So with that chip card, you already contain all the information regarding the person. Whereas in some countries, those ID are not yet there, right? I mean, there's no single identity of population in that country. So that, for example, we have to give so that we have to go to market slightly different. If we have to approach the market slightly different. Digital literacy, right? I mean, how people adopt to digital, that is also important. Some countries, population, certain segment of some countries, they know about the digital very well. They have been using chat, you have been using hail writing apps, for quite a while. So getting that to digital payment is easier than the other countries where most of the digital adoption is still very new.
Thanks very much. I think working in the financial services space, I think regulation, particularly because you have different laws and rules across ASEAN, is a hurdle that we do need to cross. And and as you go and you in a way pioneer it, you are allowing other fintech companies, I guess, to fall behind you. Do you see that as your experience, Kelvin?
I do concur with what was shared. Point just now in terms of, because it's a licensed industry, entering a new market is actually quite difficult. But even after you get a license, it's really half the battle won only, right? Because each of this market, the nuances are very different, especially when it comes to SME financing products, right? That when it comes to consumer financing products, perhaps a bit more standardized across market. But when it comes to SME financing products, it becomes very localized, and therefore just getting a license is just the first step forward. After you localize, you give out money, then the next question is that, can you collect the money back? And after eventually you understand the market, then you realize that, hey, new local players have come up, and you have to compete quite ferociously with them. So, but unfortunately in Southeast Asia, given that we are such a fragmented market, you have almost no choice but to expand outside of each country. And I think that perhaps the only advice or experience that we have is that after entering into three markets, I think the key lesson is that if you do enter a market, you need to go all in, right? Because it's going to be a long game. The first 12 months will not give you much volume to show, even when you want to fundraise. So either go all in or you don't go in at all.
I think that's an interesting point. So, you overcome regulation, you go into that particular market, and in each market, you may have your own competitors that are in that market already or starting out in that market. And so your competitors may then be different across the board and across ASEAN. And I think, Kun Tanyapong, that's your experience as well. Yeah.
Exactly. So, as Kelvin mentioned, it's really depending on the chain or the value that you're providing to your customer. Loan, for example, giving loan is not just giving out the loan. Giving out the loan is the easiest path, right? Getting the money back is more difficult. And that when you come into regulation that are different among different countries. Some countries are more stricter in terms of how you can collect the money from people. Some countries have no regulation at all that govern that.
Okay, let's talk about regulation a little bit because this is a theme, and certainly, I guess the first when you look to a new market, the first thing that you need to consider as you expand into that. And YT, maybe if you could share your experience in Malaysia. I understand you were in a sandbox for a bit, and how that experience was.
Yeah, I mean, so we are essentially, we act like a digital insurance broker in Malaysia. We're one of three marketplaces who are in the sandbox for that. Overall, it's been extremely positive for us. Without the regulatory sandbox, we just could not do what we would do. There was no way for anyone to distribute insurance products from multiple insurance companies, or even different, say, insurance verticals from life to general. It's obviously not easy, right? In order to, I think only about 10% or under 10% of applications were approved inside the regulatory sandbox. So there's a lot of people who say, okay, it doesn't work, it takes too long. But I guess to be fair to the regulators, and where we were very fortunate is, what we were doing in terms of increasing transparency between providers, improving access to financial services products, and therefore improving penetration. These are all things the regulator wanted to do. And therefore, and I know different sandboxes have different approaches, but in Malaysia, they do allow for the regulatory arbitrage, right? So they allow us to essentially break certain rules. And they do that, again, because it allows them to achieve certain KPIs as a regulator. But overall, again, without the sandbox, we could not do what we do.
All right, thanks very much. And to the question as to what sort of opportunities and hurdles do you see actually to expand across the markets in ASEAN?
Yeah, I guess so. We look at it in two ways. One is horizontal, so to do the same thing in another market, and I think Kun Tanyapong and Kelvin we've had exactly the same experiences, right? So what is the degree of financial literacy and financial education in that market? Different regulations, different processes. But something else that's really interesting for us as a platform, right? After we've achieved a certain amount of scale, is that it also opens up opportunity for vertical expansion, right? So we see, essentially, as a marketplace, we see where there are mismatches in supply and demand, both on the credit and insurance side. And at the moment, we're just a marketplace, but in Malaysia, we see huge opportunities where lenders are not lending to consumers where it could be done profitably, right? We see opportunities where insurance products are just not personalized enough for consumers, and from a growth perspective, I would say there's just as much risk, right, and different types of challenges, but there's a huge amount of growth potential to expand vertically as well as just horizontally.
Thank you. And Ron, have you got any comments around expansion and hurdles and opportunities?
I think it's been very well covered. I mean, the regulatory part is complex. I think at the end of the day, there's two things. I mean, one, maybe it lends itself, to collaboration, which is a good thing, like across different companies. And the second piece is, like everything, if you want to scale out and go to different markets, you need to have some competitive advantage going into those that kind of exceeds whatever local players' capabilities are in the market. So if you're lending, it might be your risk scoring capabilities, or it could be a number of things, right? It just the hurdle is higher because the difficulty of operating across markets is harder than in other businesses.
Okay, so we talked about this a little bit earlier, and that is competition, right? How your incumbent financial institutions are reacting to you and to the technology that you have, as well as other startups. So maybe if I could ask Kelvin, in the jurisdictions that you operate, do you actually see new competitors coming up? Are they your incumbent financial institutions? Are they startup? Who are your competitors and how are you managing them?
Sure, I think there are perhaps two key groups, right? In terms of startups wise, we see a ton of startups coming into the same space, especially in a market like Singapore, which is fairly open, right? I think the last time I checked with the Singapore FinTech Association, about 50 plus players are registered under the category of lending, just in Singapore itself. So 50 plus players for a 5.5 million population market, which is hugely crowded, right? And there are still new players coming in. So in the startup space, we do see a lot of competition, but like what was shared to the other players also means that it's a market entry for them. So it will be, it is chipping and nibbling our market share at the edges, and it is quite painful for us. But we do expect that over time, if we continue building our competencies and whatnot, we should be able to thrive out of this pretty crowded market. When it comes to financial institutions, we do see a range of reactions by existing financial institutions. Some choose to just ignore you or have a few meetings for research for their perspective, while others actually actively do want to collaborate with you. And of course, they will need to jump through the various hurdles, the X number of meetings, so on and so forth, finally to ink a partnership. Sometimes a partnership, after you signed, there's actual results out of it. Sometimes it's just pure PR, and then once you sign, that's it, and nothing happens, right? But I do think that from a financial institution's perspective, what perhaps is missing is that it's a lack of, or at least it's not obvious that they have a coherent strategy towards responding to it as an organization. We do find that some teams may have a certain plan or mindset towards it, but as an organization, not every financial institutions do have that in mind. And because of that, it's very hard for you as a financial technology firm or startup to actually plug into or value add to an overall ecosystem or plan, which actually increases the risk of collaboration, right? That, hey, if anyone leaves from that financial institutions, all the partnerships that you have discussed previously kind of goes down the drain. So those are two key common reactions that we have seen, be it from a startups or in terms of a financial institution space.
And how about you, Ron? I think it's quite interesting because you talked about, Kelvin, you talked about the startups and the competition around startups, but also the financial institution, and you use the word collaboration a lot, right? Is that something that you are seeing in your market, Ron, or is it different?
Yeah, our entire model is really revolved around collaboration. So, we don't really see anyone as a competitor. We built our platform in a way. So we provide now a number of financial services to our customers, from access to loans, to remittances, to bill payments, etc. But we typically work with partners to provide those services, right? So we work with traditional banks, existing banks, financial institutions, startups, anyone really that can expand the reach of our customers as far as like being able to connect to those services. So for us, the more players are coming into FinTech, actually, the better, because the more there is to offer to customers, right? So I think that approach to me is going to lead to better long-term ecosystem. That said, I mean, if you kind of want to look at the reaction of the traditional players, I think there's kind of this old saying is that every time you see a challenge, right, in a market, there's like three types of response, right? You either have frustration, right, indifference, or innovation. And I would say that in general, we see people bucketed in those areas, right? So some people are just, okay, this has been our industry for decades, nothing is going to change, and they're just sitting idle. Some are, trying to find ways to be protective in an industry that's actually going to be very hard to protect because it is definitely rapidly leaning towards evolution. And we're seeing some that are doing really exciting things, actually rallying up their troops, building up their technology, and I think those are going to be the ones that will, lead us into the future, right? Those are the ones that we're most excited to partner and work with.
How about Tanyapong? I mean, in the markets that you're in, are you looking at do financial technology firms collaborate? Is there more a culture of collaboration, or is there still a lot of competition by both startups as well as the incumbent financial institutions?
Collaboration is very important, right? Especially in the space of e-wallet. Right? I mean, e-wallet is all about partnership. Actually, how do you bring more customers coming into your platform, right? And you alone, I don't think anyone has big enough ecosystem to bring everyone onto the platform. So collaboration is important. I think we work with banks, we work with non-banks, we work with FMCG companies. We work with many companies that might that we can provide solution to them. So we collaborate to many people within the countries. But of course, I think for certain countries that we are operating in, we start to get bigger. I think many competitors, mostly incumbent, start to see us as competitors. You look at and this is where the market like Thailand, for example, where we have a quite a substantial user base on the e-wallet. Right? So some of the incumbent, for example, some of the big banks also seeing us as a threat, to their services that we provide. But although I mean we actually wear two hats, right? One, we work with them. We actually work with every banks in Thailand. Every bank can connect with us. Every bank can customer of every bank can fund in through our wallet using the bank account. But then we also collaborate more deeply with certain banks. For example, looking at partners in providing loans to our customer via our e-wallet. But for some big banks, they may look at us as a threat, where eventually, customer may choose to use wallet more than mobile banking. So that's something that we come across.
Okay, thank you. I'm going to change tack a little bit, and this is a question which, I would like the panel to answer, and especially since, you've heard that, when they were looking at the new markets, they were looking at, what the gaps were and implementing what they thought, the market, what gaps there were in the particular markets. So if I can ask YT to start, is the vision that you had when you first started, is it the same vision that you have now, or has it changed?
Good question. I'd say broadly speaking, in terms of what we want to do for consumers, that hasn't changed. Our I don't know if I'd call it a vision, but the purpose has always been about helping consumers make better financial decisions, right? Improving access to financial services. What has been completely turned upside down is what we need to do to get there, and especially the depth of services which we need to offer and the breadth of expertise we need to build. But maybe not the vision, but the purpose for us has always remained the same.
Right. Okay. And Kelvin?
I think I echo what YT said, right? That we have started Funding Societies Modalku because we genuinely believe that everyone deserves a chance, right? Be it for SMEs who may not have as much access to financing as they deserve, or retail individual investors who may not have that many investment options as, say, the high net worths have, right? So the goal and the purpose have remained the same, but how to get there, we have gone through quite a few trial and errors.
Okay. Ron?
Yeah, I would say exactly the same answer.
It's good that you have the same sort of experiences. And Kun Tanyapong?
Yeah, I completely agree.
Same.
Yeah, I think the purpose when we start out is the same, right? It just hasn't changed. But the way we approach the market is completely different when we start out.
Okay, so on to the last question, and if I can just ask the audience, if you've got any questions, please do put them into Pigeonhole, and we can our panelists, I'm sure, will be very happy to answer your questions. But and I think we've got there, but actually if we could go a slide back, if that's okay. And the question is, what's next for you, right? In your market, in your sector, what do you see the next trends being, and how are you going to deal with these trends? And maybe YT, if I can start with you.
What's next? I can't tell you when it would happen, but to us, the future is about personalization of financial services. In the current world which we live in, the way products are developed, whether it's banking or insurance, is still extremely traditional. It's based on traditional processes. It runs on traditional technology. It uses traditional data sets. And the end result of that is consumers are not getting products that really suit their needs. But with everything that's happening in the world and just the sheer amount of data that's being created, at some point you'll start to see highly or hyper-personalized financial services.
Fantastic. And Kelvin?
Perhaps two evolution. One is that I think as lending fintech players strengthen their core competency on what they can offer to financial institutions, I do expect the collaboration between fintech lenders as well as financial institutions to be a lot more tight than what it is now. One is the increased competency, another is increased realization that they need to work together. I think that's number one. Number two is also that we do see that over time, all the e-commerce, everyone will offer lending. So everyone will want to have a piece of the pie because this is supposedly a very big and growing and juicy piece of pie to target, right? But also, our hypothesis is that a lot of these players would not want to do it by themselves as well because it is very risky for you to take up the entire lending endeavor by yourself. And therefore, most likely they'll be partnering 2-3 players as external players or specialist player like us as a complement to really build up this lending piece.
Yeah. We are in the payment space. So what we are seeing across all countries is digital payment is going to happen. There will be more consumer that will start to use more of digital payment, one form or the other. In what form, we don't know, really depending on different countries. For example, in countries where smartphone is highly penetrated, people have access to data, that probably will happen with e-wallet applications. For other countries where smartphone is have less penetration, or people have smartphone but they may not necessarily have data with them in order to make transaction, there will be other form of digital payment, via chatbot or other type. But that definitely will happen, right? And with that digital payment, I think what we will see is people who go into digital payment, they will get more information about customer, about retailer, about merchants. With that more information, that digital payment that happens, what we will see is we will see more of digital lending, that using alternative data in order to underwrite, in order to give loans to both consumer and merchants.
Fantastic. And Ron?
So I think there's bad news and good news, right? So the bad news is we're still really very early on, I think, in this journey. Like the progress bar is at literally at 5%. We're at 5% penetration. The good news is I think this is going to accelerate tremendously over the next 1 to 2 years. We're seeing all the signals. Even the past year has been very, very fast. And the second piece of very good news is I think very similar to how cell phone penetrated, kind of leapfrogged the traditional telco infrastructure in many countries, especially in many emerging markets. The way that financial services are being implanted now into these markets is also going to leapfrog the way that financial services are actually rendered in more developed economies. Meaning the infrastructure here for driving services to consumers within the next 2 to 3 years, I think, is going to be at the forefront. I think that people who were, for decades completely unbanked, now actually have multiple options, and they're going to have even more optionality as far as where they can take a loan, where they can invest their money, etc. So I think that part is quite exciting.
Sounds to me that we've just dipped our toe in the water and exciting things to come. Okay, let's just move on to the audience questions. The first one, which is quite interesting. Okay, the one at the bottom. So will bank-skeptical millennials come to trust certain fintech companies, or will they just keep surfing trends? Does any one of you want to take that?
We have a lot of millennial customers. The question is, will Facebook trusting millennials ever come to trust traditional banks? Because as far as digital wallets, etc., their adoption is completely intuitive. I think that,
So you think that there could be brand loyalty?
Sorry?
Do you think these millennials, whether they may have brand loyalty to new technology companies?
I don't know about brand loyalty. I think their loyalty comes to good service and good product. But I do think that the younger demographic is very fast on adoption and much more trusting. I mean, our business, we've been in digital currency business for a long time, and a lot of people are asking, how will people trust digital currency? And I think we roll down one generation, people will ask, how did you guys trust like stones like gold and rocks to trust value where you can have something that's digital, that's registered? The mindset is like shifting very quickly.
Does anyone else have any comments?
I do think that there will come a point where millennials really trust a certain brand in the fintech industry, because you have already seen that happening in the UK, right? That some of the folks who come back from UK and say, hey, this is such an exciting card, or this is such an exciting digital bank, let's get it, even if we can't get it here for now, right? So I do think that there will come a time where this happens in Southeast Asia. But a lot of Southeast Asian fintech players have not built a user experience that's so superb, that's so impressive that people actually reach that level of brand equity. So I think a time will come, but perhaps it's not in the near future yet.
Thank you. Shall we move on to the next question? Okay, so which specific sectors do you believe fintech firms will have a material influence or a true disruptive industry impact? Maybe if YT or Kun Tanyapong have any comments?
I think it will happen across the board, and mostly for mass consumer, right? Because I think what most fintech firms are doing is trying to solve the customer most mass consumer pain points. So I don't see a specific segments that fintech firm can basically fintech firm they need to focus on, but there are some and this is where most fintechs are focusing on. Most of them are focusing on non-unbanked customer, unbanked population, right? Because these are the group of people who are highly underserved, who are not being served well by their banks or by their financial institutions. But there are reasons why they're not being served well, right? Either one, the cost of servicing is too high, right? And that's where fintech can come in and said, okay, we provide a better solution. With a lower cost of servicing, we can provide a better pricing for consumer. And the second part is data, right? Whether a fintech firm can have enough data or data that incumbents, banks or financial institutions may not be able to collect or may not have in the past. Right? So I think that's two key questions that has to be answered.
Yeah, I kind of like the approach that you're taking. Essentially, the fintech companies or firms have to be nimble to understand and to assess customers' needs at the end of the day, whether now or whether the needs are evolving, and then address and have services and solutions to address the needs of the customers. And I think when you talked about data, big data and analytics, and I think compliance as well, right? As you talk about regulation, that could be another area as well. Does any other panel members have any comments?
Maybe one way, and we're biased the way I look at this, but I think if whatever products which can be disrupted, wherever you can digitally disrupt the distribution of a product, that's always a massive hurdle, right? Why do we have such a large unbanked population? Well, it's because it was so difficult and so costly for banks to serve them, right? So if you can digitize the access to a financial service, right, and that's not easy, but if you can digitize that, then that makes a huge difference. But if you look at, say, investments, digitizing access to investments doesn't necessarily change the investment world.
Kelvin?
I think, I believe the reason that all of us are here because we believe that our space, we can truly make a material impact to the society, right? But between the material influence or truly disruptive industry impact, at least I genuinely believe that we are serving a complementary segment as a banks, right, or financial institutions, and that the ultimate effect is really to expand the pie together, not to replace one another. Therefore, I genuinely think that it is more of material influence instead of a disruptive force. And I'm not saying that because, hey, it's politically correct or because this is recorded, but I genuinely believe that the product that we have structured is really complementary to what the banks are currently offering.
Okay, fantastic. Final comments, Ron, or all good?
No, I think I concur.
You concur. That's great. We've got a panel which are very agreeable and certainly have had very similar experiences. And with that, we are at the end of our time. So if you could join me in showing appreciation to our panel members. Thank you very much for listening. Thank you.